Hey guys, you're back with Steph Den, and it's just me, Steph, here today because we're finally doing an update on my investments. If you've seen any of our videos this year, like my financial plan for 2021, our investment strategy breakdown, our Wealthsimple platform review, all the videos like that, then you know that I'm really focusing on investing more of my income this year. So today we're finally going to share what the results have been in the last 2.5, 3 months, what is going well, what's not, what I plan to keep doing, everything like that. So we're going to cover my Wealthsimple Invest portfolio, my Wealthsimple Trade portfolio, overall what stocks I've invested in, what's coming up on the watch list, and I'll also share the percentage breakdown in the document I've been using to keep track of that as well. So if you're excited for this video and more investing updates to come from both Den and myself, show us some love down below, hit that subscribe button, and let's jump into it. Okay, so first up, we're going to talk about my Wealthsimple Invest portfolio. And a reminder, if you haven't seen it already, we did do an entire video about a platform review, the pros and cons, everything like that about both Wealthsimple Invest and Trade. So I'll link that above and in the description box for you if you're interested. So as a quick recap, I started out 2021 with my money still invested in TDE series, so with TD Bank, and I had about $7,000 in that account that had grown over the last 2 or so years. So again, started the year with that, took my money out of TDE series completely, and instead opened up a TFSA with Wealthsimple. My Wealthsimple Invest account is currently a growth account, so it's an 8 out of 10 on the risk scale, and it's made up of 80% equities and 20% fixed income. So to break that down even further, that 80% equities is actually made up of 20% international equities, 20% US equities, 15% emerging market equities, 10% Canadian equities, and 10% global equities, and 5% US equities that are Canadian hedged. And again, I started out at the beginning of the year with $7,000, and I've also invested $1,000 or contributed $1,000 per month. So in total, I'm at $10,000 for the year so far across January, February, and March. And my account right now is actually sitting at a positive return for the first time since opening it up. So at the moment, my $10,000 that I've contributed is currently actually at $10,017.92, which is a 0.2% return so far. Again, if I had filmed this video last week when I was actually initially planning on doing it and then it got pushed, I was at my $10,000 was at $9,888 for a return or a loss of about $111. So again, a loss of 1.1% or a gain of 0.2%. Really small apples that we're working with here, but just wanted to give you some background in the fact that it had been at a loss up until now, up until literally last week, and it's finally dipping into the positives. What's kind of interesting is that digging into this, we did see that a lot of portfolios are actually sitting at a loss over the past couple of months. Den and I were recently just talking about a story that he was reading online about someone who was so confused. I think it was on a Reddit forum or something, and they were talking about how their Wealthsimple Invest portfolio was so low, they were losing money. Should they just close it all together? I don't know. They were just feeling very frustrated. So obviously I won't be doing that, but there is a reason why that's been happening. So again, taking a closer look at my portfolio, I think all of my equities, if not the vast majority of my equity investments, are actually up right now. It's my fixed income, which is made up of 16% government bonds. It's currently at a loss of 9.2%. And then my gold, which is 2.5% of my portfolio, is down, I think, 7.6%. Now, again, this is simply just a reflection of the market. And Den and I have been talking about it recently, and you also might have seen yourself in some of the news headlines that there's a few different things going on. We're seeing that interest rates might go up, we're seeing that a huge sell-off might be coming, and also there's been a lot of questions around the new stimulus package that's been sent out specifically in the United States and how that might impact some of the markets as well. So all of those things might sound kind of random, and you might be wondering how that's actually impacting your portfolio. But to keep things simple, basically the market's very sensitive to the potential of things resetting. Again, throughout the pandemic, we've obviously seen some industries do better than others, like the tech industry compared to tourism and hospitality. But again, as vaccines start to roll out, spending in some of those more impacted areas will eventually go up again, which will change how those industries are doing in the market. And keep in mind that on the flip side of that, some of the valuations that have really gone up and been inflated will also eventually come back down a little bit. So basically, all that being said, we're going to see some shakiness, things going up and down in the market, at least on the short term. So going back to my portfolio and me specifically, something else Den and I have been talking about lately is the fact that investing any of your money into fixed income is basically more so to reduce your risk as opposed to increase your return. So again, considering that it's going to be shaky in the short term, but I'm planning on investing this money specifically in my Wealthsimple Invest portfolio for the long term. and I'm only 24, it might make sense to me to actually change my portfolio to 100% equities and reduce that 20% fixed income down to 0. Again, over time, as I age, eventually year over year, I'll bring that risk back down a little bit probably. Again, over time for sure, in the long run I will, but in the short term, and probably by the next time I do another update video like this, I'll likely have switched my portfolio to 100% equities. So stay tuned for that one. I'll give you an update on how that goes, the process, what that means for my portfolio. So again, you'll hear about that in the next one. Okay, so now let's switch over to my Wealthsimple trade portfolio and see where I'm at there. And as a reminder and recap as well, I'm using my Wealthsimple trade portfolio to invest more so in single stocks. So again, I'm currently investing $350 per month. So across January, February, and March so far, which we're at the end of right now, I have deposited or contributed $1,050 to that account, specifically a TFSA still. But in my account right now, I actually have $1,113.99, which is great. It's actually a return of $63.75 or 6% overall right now. Again, it's always nice to see that, but let's dive into what I'm actually invested in and what's grown or actually had a loss over time. There's 4 companies that I've invested in across 2 different industries, so let me break those down for you. So the first one, which is actually the stock that I invested in most recently, just this month, is Algonquin Power, or AQN, which is a renewable energy company, and I bought 18 shares at $19 per share, but it's currently trading at $19.98, so almost $1 increase. It's a 5.16% return so far. Again, through the research we've done on this company, and Den's invested in this one too, this company is set to continue to grow at a pretty steady pace over the next 5 years, and in turn hopefully will grow their dividend payout as well, which is something that their management is focused on. So again, something that we were interested in seeing, and we wanted that long-term potential when we invested in this one. The next stock I've invested in is Bell Canada, or BCE, which is a telecommunications company in Canada. Actually, something to note right here while I'm thinking about it is that all 4 of the companies I've invested in so far are Canadian-based, which is great considering that I am using Wealthsimple Trade, which doesn't have the US currency conversion and all of that, which we talked about in past videos. So anyway, something to note is that all of these are Canadian companies. So back to Bell Canada, I bought 3 shares at $54.84 per share, and it's currently gone up to $57.48 for a 4.81% return. So both telecommunications companies I have some stocks in, Bell Canada and also TELUS, which I'll talk about in a second, have kind of been overshadowed and quiet in the media lately, specifically with Rogers' acquisition of Shaw Media. This stock itself has been pretty much around the same price point for about a year now, but it does have a good dividend payout, which is something I can't complain about. And if you're interested in hearing us talk a little bit more about dividends on our channel, let us know in the comments below too, and we can talk more about that in a future video. So next up is Emera, or EMA, which is another Canadian renewable energy company. So with this one, I bought 7 shares of Emera at $49.85, and it did have my greatest return so far. It's currently trading at $55.59 for an 11.51% return. So really, this one's a great defensive stock. There's not too many exciting things to say about it, but it has had very consistent earnings, and also obviously the share price has continued to go up in value even over the last few months since I did buy some. So I'm happy that I was able to snag at least a few shares before it hit the $50 mark, and it's continuing to climb from there. The last up is TELUS, or T, which is that other telecommunications company that I mentioned before. So with TELUS, I bought 7 shares at $25.58 per share, and it's currently my only stock I've invested in that's at a loss, currently trading for $25.33, which is a 0.98% loss. And again, that just dropped last week and pretty minimal considering it's a loss of less than 1 cent. So TELUS is a company that we think has done a really good job from a consumer and branding perspective. In terms of their actual numbers and performance, they've done pretty well so far, and their goal, if you read into them, is to grow 10% in 2021. Overall, the valuation for this one is a little bit higher than other Canadian telecom companies, but again, there is growth to come for the entire sector, and I like this company, so I'm not too worried about that one. Also, because the stock dipped slightly last week and it's actually currently trading at lower than the price I bought in originally, I might actually dump more money into this one and buy more shares when it's at this price, because I do believe it's going to continue to go back up based on everything I just talked about. So overall, all the stocks I have invested in so far, although there's only 4 of them, have been performing very well, with Emera obviously in the lead so far. Okay, so now let's look at these stocks overall and how they actually make up my total portfolio. And again, the breakdown you're gonna see on the screen any second now is just my Wealthsimple trade portfolio. So let me know if you'd wanna see something like this breakdown when I include my invest portfolio and just other investments in general. But for now, to keep it simple, I'm showing you the 4 stocks I have in my Wealthsimple trade portfolio. So again, you can see Amira is the largest portion of my portfolio at 33.7%, followed by Algonquin Power at 33.1%. So this means between those two investments, in that one industry, the largest portion of my portfolio is obviously 66.8% in renewable energy, and the rest, a remaining 33.2%, is split fairly evenly across TELUS and Bell Canada, with a little bit more in TELUS. So far it obviously doesn't seem super evenly distributed. It looks like a bit of a funny split across the two industries, but again, keep in mind this is only with about $1,000 invested so far. Obviously, we'll see more industries thrown in there and more companies and stocks I've invested in as well, but I thought it'd be a really interesting starting point to see it like this, and then hopefully we'll see that pie chart shift and grow and change as I continue to invest more and more. So again, this is the distribution and percentage breakdown right now. I'd love to hear your suggestions on what you'd want to see in the future to make this more interesting as we continue to see my portfolio grow and change. Again, we'll point out different patterns and have more to say on it at that point, but again, this is our starting point, and let me know in the comments if you have any thoughts on it. Okay, so last up, before we wrap this up, let's chat about what's coming next. Like we talked about in our first video from this week, and again, if you haven't seen that one yet, we talked about stocks that we haven't invested in yet, so I'll link that for you up above and in the description box down below for after this one. But again, something that we talked about is some of those large cap tech companies like Apple, Google, Microsoft, ones like that. So Den's not really planning on investing in companies like that at the moment. For myself, when I consider those as a potential investment, part of the issue with that is just that they're very expensive, right? And as I mentioned a few times, I'm only currently contributing about $350 to this account. So even if we see the potential for a 2 to 4 times increase in their overall value, dollar cost averaging might take a little while to actually make a proper dent in my portfolio and make that worthwhile. So also on my list still, like we've talked about before, I am still really excited to jump in on Aritzia and that stock at some point. Again, have my eyes on it. I will make the plunge eventually, but I am looking to see the stock take some sort of dip of some points to make it worthwhile to jump in and when it makes sense to do so. Again, I'm just trying to really keep my eye on things right now and think about companies that I use, I like, in addition to ones that Den recommends to me, right? So keeping my eyes on all of that. We do expect, like we said before, to see some of that pullback on some of the stocks that are currently doing better than others as the pandemic impacts the market and things continue to shift, some industries growing and shrinking again. Keeping my eyes on that and seeing which stocks, have that potential dip and might make more sense to invest in again. Also, like I mentioned before, my most likely move that I'll be making probably in April is investing a little bit more into TELUS, since I already have some shares of that company and they're currently down a little bit more than I originally bought in at. So you'll probably see that in the next update that's what I did first in April. Something I've been trying to do lately too is when I actually do purchase some stocks, I share a little bit on my Instagram stories. So if you haven't seen those before, you can stay updated. Probably this week it'll be saved in a highlight if I did make the move to invest more in TELUS. So if you're interested in that, we'll have our Instagrams down below as well. And I'd also love to know what's on your stock watch list right now and what you've been keeping an eye out on. So let us know that as well in the comments below. There's a lot for you to comment down below, so I hope you've been taking notes. All right, everyone, that's it for today's video. I really hope you enjoyed hearing an update on my investments finally and how they're doing so far. I'll be keeping my eyes on the comments to see what you want to see in the next one. And also stay tuned because eventually Dan will have one too, sharing how his portfolio is doing as well. A reminder that we'll have some links to some of our other videos that we've done on stocks, on investing, on Wealthsimple and Questrade, those platforms down in our description box below. So make sure you check those out. And if you haven't seen some of our previous videos on investing, check them out next door before you leave us, and we'll see you back next week with more videos.